Hello everyone. Today we are going to discuss what financial accounting is, the need for financial accounting, various terms that are being used in this particular subject, various branches, objectives, advantages, and the process of accounting. So as we know, accounting is very important for all kind of businesses that we have across the globe. Accounting plays a pivotal role in running a business because it helps you track income and expenditures, ensure statutory compliances, and provide investors, management, and government with quantitative financial information which can be used in making business decisions. So, what is the need for accounting? In any modern economy, it is necessary to keep record of the production, sales, profits, etc. in any business activity, be it related to production or trade or service, involves some expenditure and returns. It is therefore necessary to have proper records of such transactions. The record keeping activity of a business is called bookkeeping, and the result of such transaction is found out by the accounting. So there are three key financial statements which are generated by accounting. The income statement, which provides you with information about the profit and loss of the organization. The balance sheet gives you a clear picture on the financial position of your business on a particular date. The cash flow statement, which bridges the gap between income statement and balance sheet and reports the cash generated and spent during a specific period of time. It is critical you keep your financial records clean and up to date if you want to keep your business afloat. Accounting serves the following purposes. It helps in evaluating the performance of the business, ensures the statutory compliances, and helps creating budgets and future projections of the business. Now let us understand, accounting is called the language of business. Why it is being called the language? Because each and every financial information which is to be given to anybody outside the organization or the internal decision making, what is the base is the base for all such decisions are financial statements. So when we talk about financial statements, it is altogether the outcome of the accounting process. So therefore, when we talk about accounting, it is termed as the language of business. For any decision making, we use the base of accounting, we use the financial statements for further decisions, for making policies, for taking loans for the business, for deciding about the suppliers, vendors, etc. So it communicates the result of business operations to various parties who have stake in business. The proprietor, creditor, investors, government, etc. So talking about the definition of accounting. So accounting, when we talk about it, has appropriately been characterized as the language of business. It records, classifies, analyzes and communicates all the business transactions that have taken place during a particular period. It is a system of recording and reporting business transactions in financial terms to interested parties. So various organizations across the globe have given different definitions of accounting but convey the same meaning. So the definition given by American Institute of Certified Public Accountants, AICPA, defines accounting as the art of recording, classifying and summarizing in a significant manner in terms of money, transactions and events which are in part at least of a financial character and interpreting the results thereof. What they want to convey. So they want to convey that accounting involves the job of recording. Recording means recording the financial happening in the organization. Any exchange of money that has taken place has to be recorded. So recording is done. Then whatever records are being maintained, it has been, they all are recorded at one place. So what we need to understand is, we need to understand what exactly have we done category wise. So when we talk about the next step in accounting, we talk about classifying. So we are segregating all the records based on their categories. So the second step, classifying, comes into picture. And then the third is summarizing. So now whatever balances, whatever status that we have in with regard to various accounts that we have, or various categories that we have formed, what we are doing is we are now summarizing. So summarizing the outcome, what we get is the financial statements. So the entire process of accounting, preparing the financial statements, has been summed up in three words, which is recording, classifying, and summarizing. And the important part, it is written that in a significant manner. Now this significant manner means there is a scientific process which is involved. There is a process sequence. So whatever process of accounting that we follow, we need to statutory follow that particular process. In terms of money, all monetary transactions which involves any financial exchange, any exchange of money, would be recorded. And there is very important point to note here, that any transaction or anything that does not involve money or any exchange of finances will be ignored here, will not be recorded. And whatever recording and classifying and summaries that we have prepared in terms of financial statements, we are going to interpret those, and we are going to communicate the results what we get from those. Now moving on to the second type of definition, which is given by American Accounting Association. They say process of identifying, measuring, and communicating information to permit judgment and decisions by the users of the information. So they are conveying the same meaning but in a different manner. Then it comes to India, Institute of Chartered Accountants of India. What they say, ICAI, process of recording, classifying, summarizing, analyzing, and interpreting the financial transactions and communicating the results thereof to the persons interested in such information. So they are conveying the same meaning. They have added two more terms to it after summarizing. So after preparing the financial statements, in the third term, summarizing, what we get is we need to analyze those using the tools and techniques, and then communicating the results through interpretation of those financial transactions and communicating the same to the interested parties. I hope you have understood what accounting is, and now let us move on to the process of accounting. So as we have already discussed uh, in the definition, that what all terms that we have discussed, recording, classifying, summarizing, then we have added on few more terms, analyzing, interpreting, and communicating. So all such words that we have used, these are the actions that we do in the process of accounting. These are basically the steps that we need to follow, and these steps are in sequence. We cannot change the sequence as per our own will. So you need to be very careful, guys, identifying first whether the transaction is monetary in nature or not. So therefore, if any transaction which is non-monetary in nature, does not involve any exchange of money, please ignore that particular transaction. So what you need to do next is, once you identify, yes, there is money involved in the particular transaction, what next has to be done? You need to record that. So recording is done in the book called journal. Once we record the transaction, what next we do? We classify. So why there is a need to classify here? We need to do classification, because everything that is been which are in relation to money exchange, everything related to money, we have put everything into one book, which is called journal. So when we are putting everything into one book, it would be very difficult for us to understand what we have done, what we have written in that book. So therefore, what next we need is we need to segregate based on different categories. So for example, if suppose sales related all transactions we have recorded in journal, purchase related, salaries payment, rent payment, electricity bill payment, advertising, interest which we receive from bank, overdraft, interest on loan, everything is recorded in the book called journal. Now if I want to find out what is the status of sales, how much sales I have done in a particular year, will I get that easily from journal? No. So therefore there is a requirement of the classification or classifying. So what we are doing now is we are making different categories. One sales, one purchase, another interest on capital, next one salaries paid, rent paid, etc. So what we are doing, we are just picking up the component, picking up the transaction and putting into the required category. So all sales related transactions will be put in the sales account, all purchases related transactions will be put in the purchase account, and so on. So therefore at the end of the year I would be able to understand how much is the sales, how much are the purchases, how much are the salaries paid, how much is the rent paid, etc. So therefore there is a need for classification. Once we classify and understand what is the balance towards the end of the year, what we do is we need to prepare the summary. And summary, we start with the book called Trial Balance, wherein we put all the balances that we have received from classifying, we put all the balances there, and what we do next is we prepare a sheet which is called trial balance, and we try to check the arithmetical accuracy of that book. And based on that trial balance, we prepare the financial statements, which is called profit and loss account and balance sheet. Also we call it income statement and position statement. Then we try to analyze using the tools and techniques. We try to come with the interpretation and then communicating the same to the interested parties. So identifying financial transactions, accounting records only those transactions which can be expressed in terms of money. If a transaction has no financial character, then it would not be measured in terms of money and will not be recorded. So transaction can be two types: cash transaction, credit transaction. When cash is paid immediately on entering into the transaction, it is called cash transaction. When one promises to pay the price later, we call it credit transaction. Okay, so what we do is recording. Recording is done in the book called journal. Accounting is considered as an art of recording business transactions in a systematic way. Then next is classifying. It is systematic analysis of recorded data. The process of grouping of transactions, making categories of transactions of one nature at one place, and this is done in the book called ledger. Then we come to the summarizing part. Summarizing is the art of presenting and classify data in a manner which is understandable and useful to management and other interested parties. Now this involves preparation of final accounts or financial statements, which includes trading and profit and loss account and balance sheet, also known as income statement and position statement. Analyzing and interpreting is the next step. So analysis is done based on the tools and techniques, and interpretation is done based on the knowledge and the expertise that accountants have. So the recorded financial data is analyzed and interpreted in a manner that the end users can make a meaningful judgment about the financial condition and the profitability of the business operations. Communicating. After analysis and interpretation, the accounting information has to be communicated, and that is to be in a proper form. Now this is done through preparation and distribution of accounting reports, which includes Besides the usual income statement and balance sheet, additional information in the form of accounting ratios, graphs, diagrams, cash flow statements, etc. I hope you all have understood the process of accounting. And moving on to bookkeeping. Now there is one more term called bookkeeping. Bookkeeping is the record making phase of accounting. So the initial steps which are being conducted in the process of accounting, we call them bookkeeping. The term accounting and bookkeeping are often used synonymously. So bookkeeping is mainly concerned with recording of financial data relating to the business operations in a significant and orderly manner. Now we talk about the users of accounting information, who are the people who are using these financial information. So we have spoken about the communication part in the process. So we always talked about people who are interested in the financial statements. So we are communicating the results to those. So now here we are talking about the interested parties. So who are the interested parties? Who can be, the users of the accounting information? So you can see the list of the users, owners, management, investors, creditors, financial institutions, employees, trade unions, government, researchers, and general public. So when we can divide the entire list of users into external users and internal users. So external users are those who are outside the organization and using the accounting information or financial statements for their decision making. And internal users are those users who are part of the organization. They are the internal management who are taking the use of accounting information for their further decision making. So accounting data is required to each individual who is related with the firm using any and all means or ways. There are numerous assorted clients of bookkeeping data. Clients might be inside and outside the association. Bookkeeping data is monetary data and is identifies with monetary and budgetary exercises of business association. These are numerous. There are numerous individuals utilizing the bookkeeping data for such a significant number of different purposes. Henceforth, the reason for budget reports is to supply the necessities of the clients. This data is helped to settle on the budgetary choices also. So when we talk about the internal clients or the internal users, they are the management, owners. Accounting data is of massive importance to the executives for controlling, arranging and basic leadership process. Executives need the bookkeeping data to evaluate and the execution of association and position of the association, with the goal that fundamental activities might be started to get enhancement business result. Additionally, the accounting and bookkeeping data is useful to the thoughts, useful to carry out their employment and decision making. Then employees, they are more worried about money related well-being of the association and productivity of the business to decide their employer stability, the likelihood of future compensation, retirement, advantages and business openings, etc. That is why they are interested in the accounting information. Then we talk about owners. Owners utilize the accounting data for breaking down the attainability and benefit of the speculations done by them. These data encourages the proprietors to evaluate the capacity of the business associations to pay profits and control them to choose any sort of future business plan. Then we have the external parties also. External users can be creditors, who can be trade unions, financial institutions, government, researchers, public, etc. So creditors are focusing on the data, it encourages them to choose the credit value of the business. The credit terms and these measures are determined to premise of the money related strength of the business. Money related soundness of the association encourages the loan bosses to break down by utilizing the exact data for decision making. Investors also require the information. They require the data since they are significantly more worried about the returns and the speculation made by them. Since it is essential for them to have the attainability of the resources into the organization, so they are interested in the accounting information. Customers also have enthusiasm for bookkeeping and the accounting data, and they measure the budgetary position, they measure the profitability, the stability, sustainability, etc. for the firm. And various authorities, government, they seek the information because of the regulatory compliances, government compliances. So moving on, we talk about the objectives of accounting. So there are various objectives which we can talk about here. So we can see few objectives on the screen. The objective is to maintain the records of the business, to ascertain the operational profit or loss, to depict the financial position of the business, to make information available to various groups and users, to facilitate rational decision making. Apart from that, if you can talk about simpler objectives, is to keep systematic records, to protect the business properties, to satisfy the requirements of law, to make information available to various users, to ascertain the financial position of the business. So these are the objectives of the accounting. Now when we talk about objectives and you have taken the overview, so what are the various advantages of accounting? So it serves as a historical record. It facilitates the preparation of various financial statements. It supplies information to various interested people. It helps the management in taking important business decisions. It facilitates comparative study of the performance of the business over different periods. It provides evidence in case of any dispute. It helps to forecast the future and come out with the projections. It provides information for judging the efficiency of the business. It is useful in getting the loans from financial institutions. It helps in the valuation of the goodwill. It helps in controlling various expenses in the firm. It helps in controlling the employees and the trade unions and have further discussion. It helps in prevention and detection of various errors and frauds in the firm. So coming with the advantages, see, the coin has two aspects, positive, negative. So what are the various limitations that we can have of this particular discipline, accounting? So it is historical in nature. It uses the past data for record making. Transactions of non-monetary nature will not be recorded in accounting. Account records show only actual cost figures. In accounting, valueless assets are also shown. In accounting, price changes are not considered. We do not consider the market price, rather we use the historical prices for determination of the book value. It is not an exact science. Use of different accounting methods reduces the reliability of accounts. Information recorded in accounts is influenced by personal judgment of the accountant. So these are the limitations of accounting. If we talk about the scope of accounting, what kind of scope do we have? Scope of accounting is extended to various forms of business organizations. So there are a range of arrangements of business organizations. The principles of accounting do not change, though the form of organization can change. Yet, disclosure requirements may alter or change as per the form of business. Government norms, rules and regulations are different for different business, which one has to consider. Hence, The form of business organization plays a significant role to reap the benefits. In some cases, transaction recording also changes with the change in the form of organization. So we can see various forms of organization on screen. We have sole proprietorship, we have partnership, we have Hindu undivided family, which is HUF, we have cooperative society, we have corporation. So talking about the sole proprietor, a sole proprietor contributes and sorts out the assets methodically and controls the exercises with the target of winning benefit. So various attributes are associated with sole proprietorship. They have single ownership. They have no separation of ownership and management. It has less legal formalities. It has no separate entity, no sharing of loss and profit, unlimited liability, and they have one-man control. A sole proprietor or a single owner is a business possessed by just a single individual. This is the most straightforward kind of business to begin and is minimum managed type of association. Contingent upon where you live, you may have the capacity to begin a proprietorship by doing minimal more than getting a business permit and opening your entryways. Thus, there are a large number of proprietorships than some other sort of business and numerous organizations that later turned out to be extensive partnerships begin as little proprietorships. Moving on to partnership. Partnership when we have more than one owner. So in case we have more than two or more than two people who are the owner of the business, they become the partners. Talking about Hindu undivided family. Hindu undivided family is a special type of business association which wins in India among the Hindus as it were. The joint Hindu family business is a type of business association kept running by Hindu undivided family where relatives of the three progressive ages claim the business together. The leader of the family is known as Karta, deals with the business. Alternate individuals are called co-partners and every one of them have level with proprietorship directly over the properties of the business. Cooperative society. The Section 4 of Indian Cooperative Societies Act characterizes cooperative society as a general public which has its destination for advancement of monetary interest of its individuals as per agreeable standards. Cooperative society have region of activity in excess of one state are known as multi-state cooperative societies. Then we talk about corporations or companies. Companies Act 1956 characterizes a business entity as a counterfeit individual made by law having separate lawful element from its proprietor with ceaseless progression and a typical seal. Investors of joint stock company have restricted risk, obligation constrained by certification or offers. Offers of such organizations are effortlessly transferable. Now talking about the branches of accounting, we can see the three main branches of accounting. First is financial accounting. It is the original form of accounting mainly confined to the preparation of financial statements for the use of stakeholders. So various terminologies that we have seen till now, the process of accounting, they all belong to financial accounting. The financial statement, the profit and loss account and balance sheet show them the manner in which operations of the business have been conducted during a specific period. Then second most important branch is management accounting. It is the accounting for management, accounting which provides necessary information to the management for discharging its functions. According to the Chartered Institute of Management Accountants, London, management accounting is the application of professional information in such a way so as to assist the management in formation of policies and in the planning and control of the operations of the undertaking. So accounting done for the management by the management is management accounting. So when the management of the organization uses financial information for their decision making, that becomes management accounting. Third branch is cost accounting. The main purpose of cost accounting is to analyze the expenditures involved so as to ascertain the cost of various products manufactured and fix their prices. Cost accounting helps in exercising control over the cost being incurred, involves in estimating cost in advance and detailed analysis. Cost accounting also enables a company to ascertain the cost by applying the costing principles, techniques and methods and analyzing the deviations from budgeted and the standard costs. Then we have further more branches of accounting which are not very popular, but they exist into the system. So forensic accounting. Forensic accounting focuses on legal affairs such as inquiry into fraud, legal cases, disputes and claims resolution. Forensic accountants need to reconstruct financial data when the records are not complete. This could be to decode fraudulent data or convert a cash accounting system to accrual accounting. Forensic accountants are usually consultants who work on a project basis according to accounting tools and techniques. Forensic accounting, also known as legal accounting, enables calculating damages and settling disputes in legal matters. Also involves in-depth investigations, carrying out various recalculations to evaluate the accounting data. Such accounting techniques are normally come into play when there are suspects of fraud, mismanagement, fraudulent activities inside an organization. Next type of accounting that exists in the system is fund accounting. It deals with keeping records for funds of non-profit business organizations. Most importantly, separate fund accounts are maintained for separate works like welfare schemes of different nature to ensure proper funds utilization. If such an entity has raised X amount of funds for helping educate children, the Y amount of fund for widow women, etc. So these are to be recorded. So fund accounting ensures that the funds for the designated causes are utilized for the same purpose for which they have raised without any kind of deviations and gaps. Next category of accounting or branch of accounting can be government accounting. Now this branch of accounting is prevalent in central government, national government and the state government budget allocations and utilization. Keeping records as per the government accounting ensures proper and efficient utilization of various budget allocations and safety of the public funds. So these are the branches. I hope you have understood the basic concepts of accounting. Thank you very much.